Hello everyone, welcome to another Biz Chats. Today I'm very excited. So Biz Chats happens every Wednesday. We have a quick Q&A with expert guests as we uncover best practices, business advice, and all sorts of business guidance as well. Today I'm very excited. We're going to be talking with Fanny from BDO Canada. We're going to be chatting about achieving financial success and how to live a life you want, which I think is a very important topic. A little bit about Fanny. She's a senior advisor and GTA practice leader for BDO Canada's wealth advisory service arm. So she has a ton of experience with managing and wealthy individuals and businesses and guiding them to success. So I'm going to invite her quickly to this Q&A, and we're going to get this started. There we go.
Hi.
Hi, Fanny.
Hi, Nancio. How are you?
Good. How are you?
Good, good.
Perfect. Thanks so much for joining us today.
Thanks for inviting me. It's a
Absolutely.
pleasure for me to be here today.
Absolutely, absolutely. So I basically did a little intro to let everyone know who you are and where you're from and what we're going to be talking about today, which I'm very excited about because at the end of the day, I think people should prioritize financial success, and I think they should honestly live a life they want to live, right? So to get things started, I'm going to go right into the Q&As. So the first one is, in the title, you're referring to financial success. Now, what does that mean to you?
Okay. So everybody's hearing me well?
I can hear you well.
Okay,
Yeah.
So very good question. The title is very relevant. The definition of success is personal and different for everyone, and also can vary depending on the lifestyle, the life cycle where the individual is. I mean, there's a lot of ways people define success and what it means to their personal life. For some, financial success is as simple as owning a beautiful home, buying an exotic car, or buy whatever they want. Others claim that success is the freedom that you achieve when realizing your financial goals. So it's very, very different, and I cannot really emphasizes on what it is in reality, the success. Everybody have their own. That's why we need help when identifying our financial goal. We need to communicate, identifying what really truly brings us satisfaction and what we are aspiring for without being influenced by what the society and others think success is. It's important. There's a lot of peer pressure and media that can sabotage our finance and have a negative effects on the life we really want to achieve. This is not an easy task, but as we are being pulled constantly in many directions and time became problematic when it's come to financial planning, we need to get help. We are specialists in what we're building, what we're doing on a day-to-day. I think for building goal and defining what's the strategy, we need to reach out to a specialist to be able to define sustainable, achievable goal and also implementing them.
I agree with you, especially from a society perspective. And the mindset of, creating wealth and the whole difference between, achieving riches and what that means versus fulfillment and being realistic for achieving something that you really are passionate about and you're adding value to society with. So, yeah, I'm with you on that. That's great. So the next question here, Fanny, is what are the common goals or how can you help achieve financial success for your clients specifically?
Well, again, it depends where my clients are in the life cycle, but we can all agree that most of us wants to live debt-free first.
Yes.
No one would like to have debt. Pay less tax. We can agree that paying tax is not something that we like, and being able to sustain our lifestyle and being able to sleep at night in case of there's an unfavorable event that might happen. I think this is the most common goal for everyone. Then there's the secondary goals, such as helping our kids, education. We can help our parents and other goals that we might have, but these are the most common one. Can have an example. I might have a dream of buying a bigger house or a cottage, funds kids' education, traveling and retiring at a certain age. But sometimes they might not be all achievable. And if we are not having a serious thought about what's mattered the most to us, we can end up with not achieving what we really want and have the life, the desired life at retirement or later in life. Thinking and having a plan increase the likelihood of achieving meaningful goals based on our value and what's going on in our life. So it can cause our dream and make decisions based on short-term goals. And unfortunately, most of us base our decision on short-term, what is in front of us, what we need right now. We want to buy it. We're just, it's short-term goal, but we have to plan. We have to look at the overall portrait.
Yeah, I'm with you. Long-term approach is always favorable.
Exactly. And during the course of a lifetime, we start working, we have multiple needs. We dream of buying a car or having a nicer one. Sometimes we accumulate debt during university, a new car again, and the list can go on and on. We always want to buy. We always want to buy what we want when we weren't an income producer, what we dream about. Thus, the importance of financial planning and being realistic on what we can afford play an important role. After that, then, like we paid the debt, we afford maybe a house, a car, the new iPhone all the time. Then we want to travel a bit before kids and marriage. Like kids are
expensive. Trust me, I could relate.
Yeah.
I have a 2-year-old and a 4-month-old. So I'm pretty sure possibly both, or maybe one, they're going to probably follow my footsteps into hockey, which you can appreciate is expensive.
Exactly. So, but before having kids and before being parent, we don't know what is this financial the commitment that we'll make with having this beautiful baby or
Sure.
getting married, buying a bigger house. Then we travel a bit. We afford a little bit of luxury. This is very important decision that we're making today for the future. We need to be aware of what we're doing now. Especially for the community that would like to start a business and invest in this business. It's required a lot of capital, meaning required to save. Also purchasing a house to have those beautiful children. The real estate environment right now, the economics is not favorable for new home owners. The price are very high. So these are all considerations that I call, sometimes we put it a little bit on the back burner because we want to achieve our short goals. And there's a huge consideration to take into, and with conversation, financial planning, these goals can be achieved and also prevent some dreams not achieving some of the dreams. So this is more before having kids. And then in the 30s and the 40s, here come the kids, education fundings. We're all consumed fast-paced into their business that we put money in or we work this time, and you're probably in that period of the life where...
Maybe.
No, I think so. So it's just like if we never sit down to think about what's going on and what we want in 20 years, the likelihood of failure is very high. And then in the 50s, where you're an empty nester, hopefully the kids are off of the payroll, that's where most of my clients think about retirement. Think about, oh, I need to save now, or I need to look into my business, what type of asset I have, and make sure that this asset that I will sell down the road or passing on to my children, or the saving that I have so far will sustain my life during retirement. Sometimes it's too late, sometimes not. And again, it's important to think through our needs and make a plan.
And it makes sense. Like, even when I think about it from, the biz on marketplace perspective, when people are looking to either buy a business or sell a business, I know one thing is you need to prep and plan for that. The success of that purchase or that sale is baked 3-4 years before that actual acquisition happens or transaction happens. So I think if you don't prepare, it's a very dangerous scenario. The next question I have here for you, Fanny, is, so from an entrepreneurial perspective, I feel that they need to plan more, and they're exposed to more risk. Would you agree? And how would you help that entrepreneur?
No, I agree 100%. That the entrepreneur are facing greater risk because of their complex situation and financial commitment at the start. Most of the entrepreneur had to put their mortgage on their house to put into the business. They have a complex situation because they're not only sustain the lifestyle of their family with the income that generated from the business, but also they have employees. They are facing payroll commitment, and it's very stressful. So planning is very important. The growing also, because the business is their future retirement assets most of the time. All the liquidity generated, the excess cash generated into the business are reinvested for the operation, not all the time sitting into a holdco and grow into a traditional portfolio. So it's have to make sure that the assets are protected into the business is very important. So there's a lot of complexity, and also make sure that it satisfies the operational needs to meet that requirement, and completing maybe a project or starting a new project to grow the business. Also, entrepreneurs are constantly facing credit risk and liquidity risk. They always have to prevent for that. And often they are uncontrollable. It's the economic, it's external. They want to make sure that their family can sustain the lifestyle if the worst case scenario would happen. In this case, minimizing risk and protection core asset become very important to maintain the wealth and prepare for whatever circumstances. At this stage, we are not talking about buying a car or having excess cash. It's really the core assets, what's make a living and what's protect the family. And we want to plan accordingly, plan the unfavorable event, plan for sustain everyone, and including the employee. Facing the bank requirement is important.
Got it. Now that's interesting with when you're talking about core assets. So as an entrepreneur, how can you identify how much they need as far as core assets so they could sleep better at night, and how can they protect those core assets?
Okay, first, working with a good set of trusted advisor help. The accountants, the lawyers, good financial planner, good bankers can help put together a cash flow. So projecting the future cash flow requirement with establishing reasonable conservative assumptions is a good first step to identify how much they need as a core asset. And just for the audience, the core asset, by definition, is the amount of money or the assets that you need to sustain at least the lifestyle that you need for in the future, or in case something happened tomorrow. How much money? Do I need 2 million? Do I need 1 million to make sure that I'm okay to sleep at night? So this is the core assets. And then after we identify those core assets, how much value in dollar amount we need after tax, it's important to protect these assets. There's a threat. If it goes down, your lifestyle or your core asset can be unprotected. So identifying the risk area and the option to identify the option to minimize and avoid the negative impact of those core assets. And thus, it can enabling achieving what's matter the most to you. Then after, the third point that I want to bring is help on finding investment for the core assets. Depending what is the nature of the core asset, it can be your business, which is the expert to identify the protection, to protect this business is the business owners. But the external asset, if we're talking about investment, finding the right investment strategy that have diversify, can protect. For example, if you have a portfolio of stocks and it's 100% stocks, when the market going down, the stocks go down. If you have well diversified, you have your real estate, your house, you have your cottage, maybe the business, then you can have a stock portfolio and looking into also alternative investment. Traditionally, what personally we like to do, or I like to do with my client, it's to look at the alternative market and invest in part. They are uncorrelated to everything's going on the market. If it's go down, this class of asset are protected. So this is some of the strategy that an entrepreneur can discuss with a team of trusted advisors to protect their wealth.
Perfect. Now, you've mentioned trusted advisors. Now, tons of people say that they're a trusted advisor. So, in your opinion, what do you mean by being a trusted advisor?
I like to say that the word trust should be all the time a title for professional, but often in this space there's a lot of advisors that are not putting in first the client best interest, but are more product oriented. They're not going to put out themselves out of the business. If they need to sell a product, they would not suggest another one. It might not fit the needs, the specific needs and the complex needs of a particular individual. We have to identify a trusted advisor. We have to proceed to a good due diligence and ask the right question and identify those that can really help. It is important to find an advisor that is objective, independent, and act as a fiduciary. A professional that will act as a fiduciary for the benefit of the audience will offer option that is in the best interest and will use the industry best practice. Some example that I can list, but not limited to. There's a lot of trusted people, but I will limit to my industry, to our industry, is accredited professionals, such as lawyer, CPAs, reputable investment professional that have access to variety of product. They're not simply selling 3 funds and you filled out a questionnaire and you fall into those 3 funds. Those that have a variety of products, so they don't feel the pressure of selling one thing. And there's the family enterprise advisors. They will help the entrepreneur thinking through their option, protecting their wealth, and they will bring aboard independent, objective set of specialists. And there's many professionals that we can go, but for the purpose of the conversation today, I felt that those advisors are very good to have a conversation and provide with the right advice. So when I speak with a team and using a team, what are the benefit? The benefit of using a holistic approach, provide access to an integrated set of solutions. So to go back on the professional, instead of going and knocking at the door of the lawyers, the accountant, the investment managers, the family enterprise advisor, if you use a team approach, which work all together to design solution, it's provide advisor with integrated strategy. You're minimizing the time, simplifying the structure, and hopefully, more likely, minimizing the fees of knocking at all the doors all the time. And it's provide with tax efficient solutions from the tax accountants or lawyers. It's can be on the legal side for complex structure, family profile, the enterprise advisor, help on communication with the family. You can also identify some various investment solutions that are tax efficient. So the investment manager needs to talk with the tax advisor, and also the estate planning. We forget about estate planning, what we want to leave to our kids or the loved one if something happened or down the road. So this have to be communicated all together to define this whole strategy.
Got it. Now, I want to touch base on the whole team scenario, but before I ask the next question, I do want to let everyone or remind everyone that today's segment is brought to you by BDO Canada. So we're very happy that you know, Fanny and BDO came all together to make this happen. So after we're done here, I highly recommend you go check out their services, BDO.ca, or even send Fanny a direct message if you have any specific questions or want to chat for coffee or lunch and ask some questions or whatnot. I think she'll be happy to do that. So next question in regards to team. Now, so you did mention who's on your team, and you know, what are the costs associated with that? Like, it sounds pretty expensive to have all these professionals, you know, come together on this team.
I know it sounds expensive, but don't worry, it's not that expensive. Depending of the expensive, it's really to knock at all the door. But so a team in general, there's one quarterback. In my case, for example, I am the quarterback at BDO for the wealth advisory services. At BDO, we're offering, we have on board a set of professional, and we also develop relationship with lawyers. We have a law firm also with BDO that work with us. We have external lawyers that can help. We also have tax professional and having a specialty in different area. We have financial planner. We have developed relationship with money manager. We have tax and estate planner, and we also have business succession advisor. So when you need all these advisor on a financial plan or to help with question, it is not charged by the hour. It's really the team, and it's one product. So it's easier and it's cost efficient. I am the quarterback. I do the interview. I build the team, and then I always contact the clients and come back with a report. So it's
there's a cohesive approach to this. Instead of having a fragmented professionals and going to all different areas, we can go to the quarterback, and then you can do what you have to do to help an entrepreneur, small business owner out.
Exactly, and we're achieving cost efficient. It's all internal. So this is the example at BDO, but not only at BDO. It's offered also at other institutions or other firm. But I can say that in terms of providing solutions for business owners, we have the whole set of advisor, both internally and externally, that can provide with solutions. And really the goals of involving specialists to address certain area in financial planning or issues, particular issues for the clients, really to simplify when using one point of contact, integrating all aspects, legal, investment, accounting, tax, estate planning into one document. And also, again, to the point, to your question, the cost efficiency of doing that is achieved.
Perfect. Now, so I want to dig into that a little bit more and more specifically. So how do you and your team as trusted advisors actually help the client achieve their goals or financial success?
Well, the process into that, this is a really good question. So as I mentioned since the beginning, developing a plan, that's how we help our clients. How we develop this plan, it's really with engaging in a discovery dialogue where my clients openly expressing their financial objective and motivation. Often clients never thought about important consideration. We are the specialists and we help identifying those important consideration or threats or issues they might have and they don't know about it. It's really through this process that we can help them achieve their goals, their objective. And the key into that is to know their clients. Communication, dialogue, that will drive the financial planning and how we can help implementing those strategies. The second, again, this effective financial plan. To be effective, it's not only like producing mountains of paper, reading to the client, and we're good. The clients know, we know the cash flows, you know everything, and then we're good. It's also being effective about it. It's not a cookie cutter, and also we're helping into the implementation phase. So once the plan is established, we have a step plan. We help the clients in taking the plan and implementing those strategies that will really achieve the goal. That's how we help the clients, and we're bringing on board the right specialists at the right moment during the implementation phase. The third item, it is revisiting the plan regularly, or when something's happening significant that might change something into the plan. This is very important. Regularly monitoring, being personally accountability, and of course correction as necessary based on the unexpected curveball that life will inevitably throw your way. This is also very important, and the cycles go back to rewrite the plan and make sure that everything is in line. The good way of doing that is having a conversation.
Yeah, and making it a habit as well, right? Yeah. Perfect. So the next question here is, how can you provide strategies on how a business owner can grow, and more importantly, how they can protect their wealth?
Okay, again, I like this question. Thank you. This is probably the most important one. As a business owners, they work so hard to build wealth and putting so many things aside to achieve their dream. And most of the time the dream is have this baby, this business alive, and producing hopefully cash flow to sustain their retirement. But they're very committed to the business, and protecting this asset is very important. And this needs to be taken into seriously throughout conversation with a trusted advisor. Implementing wealth strategy, some of example that we can identify is using inter vivo trust to protect the family wealth against any potential marital breakdown or credit proof. Business owners can be sued. There's creditor associated to the business. So putting asset in an inter vivo trust might be a good option for them. And also if the children are beneficiary of some of the asset or involved in the company, in the business, if the goal is to protect this wealth from potential marital breakdown, which occur often, it's a good way. The other one is reviewing the needs in life insurance. It's sad because life insurance have a bad reputation sometime, or people are not enough educated about the benefit of using life insurance. But reviewing the needs or taking on life or term insurance can be very helpful to sustain a lifestyle for the family or increase the well-being if there's any health issues. So life insurance also can be used as debt in case of a premature death, to cover the tax bill or buying back share of another shareholders. So that's good strategy to help protecting the wealth and not depleting investable assets, retirement assets, in case of some things go offside. Diversifying your investment. Now we have the business. To the previous question, we have the business. But the business is already exposed to a lot of risk. Maybe extracting a little bit of assets from the business and investing in other area. It can be real estate. It can be stocks, bond. It can be alternative market. But trying to diversify the risk is a good strategy. So one going down, the other one is also protected. Using a specialist and looking into the assets, the nature of the asset and the risk area would be a good strategy to protect the wealth. Managing the tax burden. I love this this topic. From background, I'm a tax accountant, and I relate most of the wealth strategy, a lot of wealth strategy to tax. Saving over 50 cents on a dollar can help a lot. A lot of clients are focused on the 4, 5, 6, 7% and the 1% fees of an investment managers, but they don't look enough closer at the tax saving they can achieve with implementing tax efficient strategy.
And I think, just to jump in, I think the reason why that happens is because you touched on this at the beginning, the whole short-term thinking versus long-term thinking, right?
Yeah, exactly. And reviewing the available tax strategy is an exercise, I think, that should be done all the time, every year during the tax season. That's what I do. I review that every year, make sure that everything is good. And I can list some of the tax strategy that some of individuals should consider depending on the situation. But we can talk about splitting income using a prescribed rate loan. The prescribed rate loan, basically what it's achieved is using the income of one spouse by transferring income producing investable asset to the other spouse by ways of a loan. So a loan in exchange of the assets. So the tax related to the investment of the portfolio of Mr., for example, will be transferred to Miss if she's at a lower tax bracket. And by the way, the interest related to the prescribed rate loan right now, it's 1%. Soon it will go up to 2%. So if you think that this strategy might be a good one, you should think about it before April. As I mentioned, allocating investment tax efficiently, some in TFSA, RSPs, there's a business. So having a good understanding what's the nature of the income of all the investment and where it should be is a good way. Gifting assets during lifetime. Sometimes we have more than enough to sustain our life. And instead of waiting a debt to transfer those assets to our children's or anyone that we would like to leave the assets, income producing assets such as portfolio or money, we can start gifting right now. I do that often with my client, define strategy and how much they can give during lifetime to minimize the tax burden. Philanthropy. If we're thinking about,
I was just gonna say like charity as well. Yeah, that's what I was thinking.
Charity is a very good tax efficient strategy. If we're using our corporation to give, and if we're giving stock accrued with accrued gain, we're saving the capital gain on the stocks, but also we get the deduction into our book from the net income. Plus, it's achieved extracting funds from the corporation tax efficiently by the capital dividend account. And I don't want to go too much in detail with the tax strategy here because that's not the purpose, but that's all the type of strategy that we can, with a good conversation with your tax advisor, benefit of. And there's plenty of other ones. When we're thinking about saving into the company instead of doing RSP, we can think about an IPP or RCA. These are tax efficient tool that we can think. So that's
perfect.
I can go on and on.
Yeah, and it's great.
Strategy. Yeah. But the key, I think the key message here is there's a lot out there to benefit of if you're a business owner.
Yeah. And
go have a conversation with your tax advisor, a good one, and communicate a lot. What do you want? What's your dream? What's your goal? What's your situation? Where you want to go? Disclose. They will help.
Perfect. Now, this has been amazing. So thank you so much, Fanny. The last question, and sort of like a quick question, what should an effective financial plan contain?
Well, I think the effective financial plan first, at the most, they have to have a section with cash management that reflects that projected cash flow showing the inflow of outflow. So a good understanding what's in, what's out, and it from that graph or that analysis, you can identify what is the excess cash or a deficiency. From there, you can implement or look into the option to either fulfill this gap and fulfill the deficiencies, or what are you doing with the excess? Do you want to invest it? Do you want to put it into the corporation? Do you want to give it to your kid? So that's a good start. The other one, which we already mentioned about it, it's the protection and the growth of the wealth. We just discussed about it. Yep. The third one, investment management. The investment management part, I think, analyzing the risk that you're taking with your investment and your expected return. I have a lot of conversation with my client. They share with me their unhappiness about the return they have or the fluctuation and the bumpy ride they get with their investment advisor, and they think it's the investment advisor. Well, sometimes it might be the money manager, but sometimes it's just the conversation they had at the beginning, maybe 2-3 years ago, about their risk aversion or they're too risky, and now they have a portfolio that doesn't really reflect what they need, or an investment policy statement that's not really taking into account their current situation. So it's very important to have this conversation. To meet the expectation that you have from the portfolio. And the factor that may needs to be taken into account is, you wish to maintain the purchase of capital. Do you want the capital to grow, minimize the tax, minimize the fees? How much income the clients needs? This is all type of question that maybe it's not addressed or updated. The fourth point that I like to see into a financial plan, and I believe that it's very effective, is the tax planning. Again, how to manage this tax burden. Fifth point, business succession. You build this beautiful assets. This is the retirement assets, but how you will transfer? Are you going to make it tax efficient? This is very important. You have to prepare ahead. 2, 3, 4, to your point at the beginning, 3-4 years before. Make sure that you're probably allowed to capital gain exemption. Make sure that your assets are good. Make sure that when you're going to put your asset for sale, it's at the right timing. Well, exactly.
And I was just going to jump on that. Timing is massive as well. What I've noticed from BizOn's side is the business owners that plan ahead as far as succession planning, they actually demand a higher valuation for their business.
Exactly. And if you sell it with a third party, well, get ready, giddy up, not 6 months ahead. Or I had a client, sometimes I have clients that's come and the transaction is done, right? So maybe we can prevent things, make it tax efficiently, build a structure around that, make sure that everything's in line, and we don't have like unfortunate news or something that would affect the value. The other one, into the business succession. Do you want to transfer this business to your children? Are your children's ready to do that? How we can educate the children, how we can facilitate the communication. Most of the parents that transfer the business to the children keep the risk. They have preferred share. The value or the money they can get from those preferred share in the future can be impacted. So this is all the conversation you need to have, and maybe a little bit of hand-holding into the conversation if there's delicate topics. And the last part, I think, estate planning. It's not a topic that is very fun to talk about, it planning for the debt, but this is something that will happen, and that needs to be discussed and planned and make sure that it's done accordingly to the wishes, and while minimizing all the tax and the probate.
Absolutely. Well, this is terrific. I really do appreciate your time, Fanny. That does bring us to the end of all our questions. But the way I end every Biz Chats is with a rapid fire question. So this year is supposed to be fun, or it is fun, not supposed to be fun, it is fun. And
rapid
literally,
fire?
Yeah, rapid fire. So the first thing that comes to your head, just answer. Okay, so what was the last song you listened to?
Brother, I think my kids this morning, bro, I don't know.
The next one is, what was the last movie you watched?
My what?
What was the last movie you watched?
You know what? I watch, what is this? I don't recall the name, but it is Jurassic Park. Jurassic.
Oh, the Jurassic World?
Yeah, Jurassic World.
The new one that just came out. Oh, it's on Netflix. Oh,
yeah.
Okay.
You know what? I have 3 kids in hockey, and
No time for
music
movies.
that I listen, I just hear bro, and the movie that I watch are old on Netflix, and it's really not cool.
That's funny. Okay, maybe you could answer this one a little bit easier. What was the last book you read?
Book I read, Communication from Harvard books.
Harvard Business Review there?
Exactly.
Oh, nice. Perfect. Well, that is it. That's how simple that was. But I do want to thank you again for the time you took out of your day to do this. You provided, in my opinion, you provided us with a ton of insight and guidance. I also want to thank BDO again for, working with you to bring this all together and your team. And just for everyone to know, we will share this for 24 hours on Instagram Live. And then we've also recorded this and we're going to put it up on YouTube so you can watch it on demand forever. And then we'll be back next week for another Biz Chats. But in the meantime, like I always end off all my Biz Chats, if you're interested in buying or selling a business or franchise, check out mybizon.com. Have a great week, everyone. Have a great week, Fanny. And we'll chat soon.
Okay. Thanks, everyone. Bye.
Bye.